So you want to purchase a house, but you want to know what some of the numbers are going to look like these days. I have a loan scenario for you that we can review with regards to down payment, closing costs, cash to close, and monthly payment. So I'm going to pull it up here so that way we can go through it really quickly. Let's say you find this house and it is $380,000, and you're wondering, how can you purchase this house? If you are a first time home buyer, or sometimes depending on how much money you make, you can actually get into a house with as little as 0% down, honestly. But in this scenario, we're going to use the 3% down option. There are some loans that are 3% down, some loans that are 3.5% down. But for this scenario, we're going to use the 3% down payment. And we're going to assume you have a 700 credit score. Well, Cherie, how am I able to afford this property? Well, your down payment is roughly going to be about $11,400. That's 3% of the purchase price. The cash to close includes your down payment and your closing cost. So when we add all of those together in this specific loan scenario that I have for you, we're looking at $24,083 for you to bring to the closing table. And you may say, well, Cherie, how am I supposed to get this money? Well, with down payment, yes, there are down payment assistance programs. I will say that with down payment assistance programs, there are a lot of different programs and different requirements. So it really does depend on if you qualify for the down payment assistance and if you are willing to live with whatever structure is required. So, what am I talking about? There are some down payment assistance programs that require you to keep the mortgage, not just the house, but the mortgage for 3 to 5 years. And you have to make your payments on time every single month without fail for you to actually be able to have that down payment assistance forgiven. Well, you have to ask yourself, like, hey, what are my plans for the next 3 to 5 years? Am I willing to do this for the next 3 to 5 years in order to get the down payment assistance? For some people, in their lifestyles and what their plans are, it works for them. For other people, it doesn't. So, but there are, like I said, different features to different down payment assistance programs. And sometimes it's, just best for you to pay the down payment and then pay the closing costs as well. With closing costs, and this cash to close is $24,083. A portion of it is closing costs. So it's things like um, your lender fees, your title fees, your appraisal, things like that. And I will say that there are sellers who may offer to give you something called a seller credit for you to be able to purchase that house. What's a seller credit? A seller credit is basically when the seller gives you a certain amount of money that you could use towards the closing cost for that property. So the $24,083 could come from uh, down payment assistance. Part of it could come from seller credits. Part of it, or all of it, could come from a retirement account as well. So if you've been working for the past 5 years, let's say, and you have this money saved up in a retirement account, you can also use those funds towards your cash to close. And then another place that people will get cash to close is from family members and friends. So you may have a parent, a grandparent, somebody like that, who is willing to give you the cash to close in order to help you start your life. So that's an option for you there. And then the monthly payment is going to be 3,000 in this scenario, $3,093.32. Again, this is just a scenario, right? So you may ask, well, what are some ways for me to be able to reduce the monthly payment? Well, you could reduce your monthly payment by reducing your interest rate. And there's something called buy downs where you're able to actually buy down the interest rate in order for you to um, have a lower monthly payment. So sometimes you will need to pay additional money in order for you to lower that monthly payment. Other times you may use some of the seller credits in order to do that. But that is something that we can talk about when you and I talk one-on-one. So the final thing you may be asking is, okay, Sheree, well, what do lenders review when they are thinking about giving me a home loan? Where they're going to look at your income, your credit, your debt, your assets, and the property itself. So the first four things, income, credit, debt, and assets, have to do with you as a person, right? And those things are reviewed during the pre-approval process. And then when you find a property and you put an offer on the property itself can sometimes be denied by some lenders. And basically, it's the loan programs, it's not really the lenders, but some loan programs will not, for example, allow mobile homes or manufactured homes or homes in certain places, or you may have to, for the property, get, if it's in a flood zone, get flood insurance, which could be more expensive, things like that. So all of those things come into play when we are looking at your down payment, your closing cost, and your monthly payment. But if you want to know more, I'm Sheree the Money Lady. You can click the link in the bio or the description, set up a loan consultation with me. No pressure. It's just an opportunity for us to chat about your options. So thanks so much and have a blessed day.